Equity method investments, right? We saw fair value. Now what happens if you buy a little bit more of the company? And by a little bit, I mean, 20 to 50% of the company. Well, that's a pretty big chunk, isn't it? So this is for, billionaires buying large chunks of other companies, or companies buying parts of companies, or maybe this is even, just someone buying part of a smaller company, because 20 to 50 is a lot. We're going to see significant influence. We're going to see concepts such as the cost method versus equity method. Well, I don't want to keep you waiting too long. Let's see our learning objectives, and then we can dive right in. First off, we want to identify when the equity method of accounting can be applied to an investment, right? Super important. Well, this whole section would be irrelevant if we don't know when we're using the equity method. We're going to see the rules for that. We also want to identify and calculate the carrying amount of equity method investments and prepare those journal entries, excluding impairment. Lastly, we want to measure impairment losses to be recognized in the financial statements on equity method investments. Lots of great things. Let's keep the energy high and everything positive and optimistic. Not too bad of a section and lots of material to cover. Let's dive in.